If you do this 14 days or less, the rent that you get from your business is tax-free. This is why everyone does this strategy. So today we're going to go over the Augusta Strategy. If you've heard of this, it's essentially a great strategy to help you get tax-free income out of your business. And I'm going to go over a visual demonstration about the strategy, some things you need to do to actually carry it out, and then who this applies to. So you're going to learn all about it. So Augusta Strategy, you can see here we have your home. This is the home that you own. And then you have your business, which is either an S Corp, partnership, or C Corp, separate entity. Now, the business holds a meeting in your home, and then the business pays the rent to the homeowner for renting the space for the meeting. Now, a couple things you need to know to actually do this the proper way, which no one tells you that on TikTok. The first thing is having a rental agreement between the business and the homeowner. The second thing is you're physically having a meeting in your home, and it's held for business purposes. It could just be you have staff come over, like literally come over to your house, you have a meeting, you could be doing a photo shoot. It just has to be a business purpose, and it's generally in a different room than your home office. So a dining room, second room, not your home office. The third thing is you have to actually transfer money. You cannot just say you had a meeting and get a deduction. You actually have to have money leave the business bank to your personal bank. You're paying rent just like another bill. You would pay rent to your landlord. You're paying rent to the homeowner, to yourself, essentially a draw. Fourth thing is you have to get a quote from a similar place that you would actually go and rent if you didn't have your home to do the strategy in. The reason why you want to get a quote is you need to justify the rent paid. So if you're saying, oh, my rent's $500, how do you justify that $500? You need to go get quotes from nearby resorts that have a conference room that you could rent, other properties where you could rent like an Airbnb type place, and see what their daily rental rate is. That's number 4. Number 5 is having notes. I recommend that each person, every meeting, they have a little cheat sheet notepad that says who, what, when, where, why. Who was here? What did we discuss? What date did it happen? Where were we? We're in my house. Why did we have this meeting? We had an annual planning meeting. We went over our goals, issues in the business, hiring decisions, etc. Could be literally anything. Who was there? It was me and my operations manager. They have the notes from each meeting. That's for backup documentation. So if you get audited and the IRS says, what were these meetings even about? You say, here's my notes. So who can do this strategy? You need 2 things. First thing is you have to be an owner of an S Corp, partnership, or a C Corp. If you just have an LLC or you're a sole proprietor with no business entity, you can't do this strategy. But it may be worthwhile turning your LLC into one of these entities to actually be able to take advantage of the strategy. So you're not totally out of luck. You just need to have an S Corp, partnership, or C Corp as your operating business. The second thing is you need to be a homeowner. You can't be a renter. You can't have a place that you're renting, an apartment or a home. You have to physically own the place. That doesn't mean it has to be paid off. You just need to own the home. You can have a mortgage, you can have it paid off, doesn't matter. Now, 2 fun facts. If you do this 14 days or less throughout the year, the rent that you get from your business is tax-free. This is why everyone does this strategy, because if you do it less than 2 weeks a year, that rental income that you're getting from your business is a deduction in your business, so your taxable income drops, and then you normally claim it on your tax return, but it's not taxable if you're under 14 days. Now, another fun fact, which a lot of people don't know, is this is a per property rule. So let's just say you have your primary residence, you live in one place, but then maybe you have a second home. Maybe you have a place in California, and then you have a second home in Texas, right? You can actually do 14 in the California home, 14 in the Texas home. The thing is, these have to be places that you live, and they're not rented out on Airbnb, on other rental platforms. These have to be your places that you actually live. It's not rented out yet, because if you do have a place that's rented out on Airbnb, that's already exceeding the 14 days. So then the strategy is void, does not matter. If you go over 14 days, let's say you accidentally do 15 days, the strategy does not work, you completely lose out. You don't just get to say, oh, I'll pay for the one day. No, the whole strategy is ruined. Now, if you like this video, if this was helpful, please go ahead, subscribe, like, comment, ask me questions. I appreciate you guys for tuning in. Thank you.